All right, for the folks who live on chain, this is Jalil and this is speculative. So I'm going to jump right into it. The ETF has basically been the topic of the day all throughout crypto Twitter. Right now, I am really not paying attention to it. I just don't think it's worth my time. I'm one of those guys that just wants to get huge 20, 30 X's. If this is a bull run, you're going to see a lot of new projects come out and a lot of interesting novel ideas come out. So I'm staying away from the Bitcoin ETF. I just don't think the US government is going to make it that easy for us and is going to roll over. And especially for crypto people who have been around the block, not only are they going to roll over for us and let us completely dominate the market, allowing pension funds and other institutions to buy it, but I'm supposed to believe that bankers are going to be the one who want to do this. Everything about crypto is mostly about self-sovereignty and peer-to-peer transactions. Not only that, again, it just feels to me like if you're being malicious, lead all these guys on, try to get them to buy tokens leading up to an event like this, and then deny everything and dump it. So it sounds like it could be a little bit conspiratorial, but for me, the other part of this is the trade itself. Do we really think this is going to 2 to 3x within the next couple of months? Maybe, maybe not. I mean, the probabilities are right there. It's about 85%. But if it is not the case and it dumps down, you're going to see huge liquidations. The price is going to come down to a level that I think everyone would bid if they have cash left. My worry right now, especially on crypto Twitter, is I don't think anyone has any cash left. They've been bull posting this. Lots of people are talking about using leverage. It seems very, very dangerous to me. Like a lot of traders are playing catch up after last year and the year before, where we really didn't see any real movement in token prices unless you were really, really far out on the risk curve. So I just don't like it when you've got a bulk of the traders playing catch up. You got a malicious actor where their decision is the main thing that's going to be driving the price. Oh, and there's probably better opportunities later. I'm staying out of this. I'd rather hold the cash and just wait it out for possibly another project or some other new theme that comes out. Next up, so given the situation right now with the ETF, I wanted to take a look at open interest. So open interest in the options market, it's looking like January 12th is the largest closing date for this month, along with the 26th. The 26th is the huge, huge date. Lots of puts, lots of calls, lots of open interest on those dates. So typically, I like to look out for changes in volatility right around those dates as market makers come in. They either drive the price down or try to delta hedge or get all their hedging in order so that they're delta neutral. They've either lost money or gained money, so that's when they cut out. These usual mid-month options are really, really huge events. I think the 12th here is a very big win because it is in that range of the ETF approval. Again, I'm staying away from it, staying clear of it. Just looking at it, typically the nearest end of the month options market is the largest one. So we're seeing January 26th. March is another large one, but I imagine most of the options traders will rotate back into that. So we'll try and basically see what happens there. I can't really see a max pain on this chart. I can try and find max pain later on, but if you kind of see here, the big calls are around 49.50. So I would basically like to see the price kind of hover around here. I mean, if we really do see a God candle, one of these like crazy Six Sigma events where people just pile in to purchase, it'll probably happen in the next few days. If not, we're going to see the denials come in if they really, really are going to get denied, or the approvals. I'm staying out of it, not really going to trade it. I'm going to just basically keep my cash here. But if you are interested in it, you're piling in with the rest of the bulls. Call put call ratio right now is very, very heavily weighted calls. Again, this is not a good sign to me. I don't like to trade with the herd. I would rather wait for blood in the streets. If you remember 2021, there were 3 or 4 events where we had huge market nukes. I'm talking 40, 50% within a couple of days. That wiped out pretty much all leverage. Granted, those were events that people retroactively believe FTX and certain actors were involved, especially with deleveraging. I'm not necessarily saying that's going to happen again, but when they do happen, it's really, really huge and it's a big issue. So I'm staying away from all risk right now. I think the volatility is just way too much. And for people like me, I want to survive another day. Next up, I've actually got a really interesting story here, which basically talks about Curve. So for those who don't know, Curve is a project that is basically one of the largest liquidity providers for stablecoins and some other tokens. One of the main founders of Curve, he's been basically trying to avoid tax liabilities by borrowing against the tokens. There's been a lot of talk about just how much he has and what he's purchasing with it. But the problem is there's a lot of large lending protocols that currently have Curve tokens from one single actor. And the notional amount of all those Curve tokens right now is way more than the available liquidity. So if the lending protocols had to sell, like in a typical margin call situation, there's absolutely no way they can get back all their money. And a lot of people think this is very, very near, close to a death spiral. On the contrary, Curve as a protocol is earning a lot of money. Lots of fees are coming in. I think there's somewhere around $1 million worth of fees. This is just wildly weird to me. I don't really like this situation. It's kind of one of those things that really catch the attention of regulators if it does blow up. The biggest issue here is lending protocols in general. They've got a lot of these unsiloed assets where you're putting in a single stablecoin, and the protocol itself is lending against that stablecoin with a wide variety of collateral. The collateral themselves, they do have deposit cap, so if there is some sort of loss, the loss is capped. But I have a lot to say about these sort of lending protocols. I think they should be siloed. In the next couple of weeks, I'm going to try to get on a founder for a project that I'm actually really excited about that will try and help this. But for right now, I'm staying away from lending markets. Lending markets right now, they've actually seen a lot of yield. Basically, the rates for depositing stablecoins are very, very high. A lot of it, again, has to do with the Bitcoin ETF coming in. Because of the ETF, a lot of people are leverage trading, trying to give themselves 2 to 4x as well. Again, these are the sorts of things that really, really make me want to stay back. I just see so much leverage right now. Lending yields are very, very high. So pulling this up here, we've got lending yields kind of in the, let's see. So if you can kind of see here, 48% LUSD and AAVE v3 on Arbitrum. So a lot of the L2 lending stablecoins, they're drawing in so much in APY because so many people are leveraging them. For those who do know me in some of my trades, I was actually running a little short tether position all of last year. I've closed out of that because part of that is I have to deposit USDC, and that USDC gets lent out to who else knows where. So I've pulled all my stablecoins off of these lending protocols. You're seeing 26, 17%. Like, as much as I do like, living off chain, getting yield from these things, this is the kind of stuff that scares me because it's about standard interest rates right now are around 5%. So you're telling me 20%. Some people see that as like, oh, a time premium where, hey, you're lending out your tokens for time and earning money off of it. No, a lot of times it's a risk premium. These protocols are lending these tokens out for very questionable collateral. Again, situations like Curve are, it's pretty common, and you have to trust that the protocols themselves can, in a deleveraging event, sell those tokens off at a decent amount to make sure they get the collateral or get the funding, get the stablecoins that they've lent out. But again, the problem is it's not guaranteed. And we've seen events like, for example, MakerDAO in early 2020, where they had an event. The chain also messed up transactions, and now a particular siloed vault was just not able to accrue as much value as it lent out. MakerDAO survived. I think Maker token holders took a little bit of a haircut because they ended up selling Maker tokens to cover that loss. But again, these are just, it's kind of a weird thing whenever the market, to me, is extremely bullish and everyone thinks the same thing. When everyone thinks the same thing, I just stay away from it. These lending rates are out of control right now. Some of the as I mentioned before with Curve, this particular situation has been playing out for a very long time. I definitely recommend people check out DeFi Made here because he's posted it for a very long time. this position has been accruing and accruing and borrowing, and other entities in the space have been calling it out, saying they should delever this, and it just has not happened. So I'd stay away from it. It's not really a focus of mine. I'm not going to pay attention to it, but again, I'm just not being risky here. If I miss out on 17-20% APY, or I miss out on a 2x, that's fine with me. I'm going to survive another day. So next up here, I'm bringing up Polymarket. So Polymarket and prediction markets have been one of my favorite things to talk about, especially in the crypto space. Recently, Polymarket opened up the presidential election winner. So this particular market, it's currently got about $3 million in notional open interest right now. You got Donald Trump, Joe Biden, Nikki Haley, etc. I predict, and I'm going to probably write this down somewhere, I predict this is going to end up with over $1 billion in just open interest. I also think, you're going to see volume somewhere around 3 to 4. There's just really no other place right now that's offering prediction markets for political betting. Polymarket so far has done a pretty good job of just remaining offshore and away from regulators. Regulators right now, there's been a lot of talk with the CFTC trying to get this to be legal. Kalshi and some other players have been basically trying to get the CFTC to make it legal. It's a little bit of a headache. There's lots of issues right now. It's a good cross between states' rights, politics, current betting laws. There's just a huge mix. No one really wants to do anything. But because Polymarket has remained offshore, it's going to attract a lot of volume. I personally don't know anyone on Polymarket. Like in terms of the team, I think it is very, very well insulated and offshore. But so I wouldn't necessarily say you should trade it. But at the moment, I just think political prediction markets, they're going to be probably a really, really good driver of influx into crypto and just interest. So already as well, Donald Trump recently on I think his social network is called Truth Social or something. I'm not on it, but I have seen screenshots where he's citing his particular pricing. So you check the graph here. So he's currently trading at around 47%. Lots of stuff to say here. He's basically shrugging off every single indictment that he's got. Joe Biden's currently trading at 35%. There's much to be said about politics. I'm not a political expert. I highly recommend checking out Star Spangled Gamblers if you really, really want to learn more about political betting and prediction market betting. They do a great job there. I just want to highlight, just in terms of the crypto space, this really should be driving a lot of value. And I do want people to take a look at it and pay attention to it. Just in general, talking about Polymarket, there's plenty of these markets here. I typically check them for the news every single day. My first thing kind of in the morning is to check out Polymarket and see if there's any huge volume spikes or huge liquidity spikes. But right now at the moment, it's a lot of politics, and obviously the ETF being approved. Next up here, I think I want to talk a little bit about Curve. So Curve has been one of the largest mainstream companies to sort of come into the crypto space. So pulling this up here, it's got $25 million. Oh, actually, so they basically have a Curve pool where they have $25 million in its own native token. So PayPal has basically been super, super interested in the crypto space. I have Venmo, and I have a lot of friends that use Venmo. I've been trying not to use it as much as possible, but the reality is here in America, Venmo is the de facto standard for sending money between friends, mostly for people under the age of 40 who aren't paying their landlord. They are going to use Venmo. Venmo does have a crypto section. It really isn't open that much. And I'm actually waiting for PayPal USD to come out, get really, really good support on Venmo and PayPal, and possibly even in a layer 2. I know it's available. I just personally don't use it because it's only on Ethereum mainnet. They've got to obviously get some support and marketing out for this. But when you're looking at $25 million here and a total of Frax, which is $110 million, so somewhere around $135 million in this pool, you could basically say that the team working at PayPal, I believe it's also ran by Paxos on the back end. You can correct me if I'm wrong there, but they are doing something here. I don't think they're marketing it very well. No one's really using it, but it's obvious that they're going to keep this going if they're throwing somewhere north of 30 to $100 million on it. I think the very last thing I want to highlight here, just the scams. The scams have been pretty insane. So me personally, I'm on Twitter. I follow a lot of Twitter, crypto Twitter people, just to make sure, hey, what's going on in the space. But I've noticed on Twitter, there's been almost too many ads that look like existing DeFi protocols. So I just want to say, before closing out here, be safe out there. For example, this one right here, Spark Protocol. It's a little subsidiary out of MakerDAO, but it's got a little underscore at the end of it. And they always have these links here. They'll tell you, hey, you know, there's an airdrop coming, there's a milestone, whatever. You can click the link and get a little airdrop. And just remember, there's no such thing as free money. Double check if it's an ad, if it's actually from the group. Twitter's actually, I think something is going on there where you can't even report the ads right now as spam. It says a lot about the company right now. I think the current state of the company, especially internally, it seems very weird. I find it shocking that anyone can make an ad and there's no way to report it as spam. So you're getting targeted ads to crypto users in the crypto network. I'm pretty sure there's a network analysis where you can basically try and figure out all these users here, and there's a ton of them. Every single day I log on, I see these things. I'm trying to be very, very careful, trying to make sure you're following good people. I have a list. If you're really interested, I can send you the link to the list, which is all the DeFi protocols that I see. You know, any sort of main announcement from one of these protocols, they'll come out of that Twitter account. And also, just be careful too, because people hack Twitter, people hack Discords. There's been plenty of examples of Discords getting hacked, dropping in links, and people getting either fixed or scammed just clicking those links. So be really careful. Now's as good a time as any to make sure your OPSEC is good. Make sure you're using hardware wallets. Make sure you've got a really, really good wallet that can do sort of transaction scanning and transaction simulation. Rabby is a good one. Also, Frame is a good one. There's probably some others out there, but those are the two ones that come to mind. But just don't click random links on Twitter. Try your best not to essentially get caught losing all your money, because if we are going to have a bull run, it would be pretty sad if you got stuck with absolutely no money and you're just sitting on the sidelines basically having to work to regain capital again. It would not be great for you. So be safe, double check everything, make sure your OPSEC is good. And I think for that's pretty much it. I'm hitting about 20 minutes here. I'll try and get another video out. I'm sort of thinking Tuesday, Wednesday. I'm trying to schedule for Wednesday. That might not happen, but absolutely Friday. By Friday, we'll get some good information about the Bitcoin ETF, whether that's actually on set and ready to go. And also, again, that options closing date will happen. So we'll see exactly what happens. Any sort of volatility, it's going to come up probably around Friday. So, all right, take care. For all those who are on chain, again, this is Jalil, and I'm here with Speculative.